Thank you so much. I think before you come to China, maybe you have heard many news about China. I'm sure most of them maybe is negative. So I just want to talk a little about the truth about China. In fact, here China there are three China. One is manufacturing China, and I think maybe most negative news were related with manufacturing China, and also we have another consumption China, and the third is capital China. So I really want to talk a little about what's the next decade growth space, and I think most important is the whole world will be much more Chinaization, just like we Chinese to be more globalization, and also there are so many new industry evolution. So I think we should think about the next decade growth space in such background. So the first I want to talk about in the next decade, China. I'm very believe China will be the engine driving power for whole world economy, but also China really need get support from whole global, whole world. So let we just think about several situations from several countries. The first is the U.S. So you are very professional about it. Really situation about the U.S. So we Chinese, Fosun, we really believe U.S. is really recover. So I believe really recover. The first is you really think very serious about quit from QE. I think is good. For a manager, even I'm just a small manager for a company. Always, when I make a decision to do something, always we should think about how can you quit. You cannot just make a decision to come in, to be into. You also think about how to quit. So I think for U.S. government is very responsible. So they do something, then they quit. That's good. I think that's good. And second, your consumption and the oil price, all of those things is a benefit for U.S. economy. And of course, when U.S. recover, also can benefit for China economy. So we can see very beginning is we can see the export for China is very good now. Just recover from the third 季度怎么说是 quarter, yes, the third quarter. And so I think for euro is not so good. So euro should also keep on the continue on the bottom of the cycle. So they need maybe 2 year more, 3 year more. But I think for a company, we cannot think about just like a government. We should think about our own benefit. So I just have a curve on the bottom of the on the right. So this bottom of right is mainly government, mainly country government bond year return cover. So curve, you can see the yellow on the up is China. So the second curve is for U.S. The third is Europe. The bottom is Japan. So compare with the guarantee. I think it's like a no risk guarantee return rate in every country. So you can see for short term, so for the long term, the funding cost in China will be 2% much higher than US, and will be 3% much higher than Euro, and like 3.5% much higher than Japan. So for Chinese company, I think it is a good idea to find a much cheaper capital results from the best results is from Japan, and the second best is from Europe. So I think it's a good idea. You cannot just depend on all those capital come from China, because China will keep much higher for long term, 5 years, 10 years, 13 years, much higher than Euro, Japan, and the US. And also we can see the Russia. So because some situation happened, so Russia really become very tough in their economy. First, we can see the funding cost. We can see the bottom of on the left. So their funding costs now become very higher. So I know many entrepreneur friends from Russia. So in their local funding, local market, their funding cost for a company, non-SOE company, even like annually will like 12 to 14% every year. So very high. So I think, and also they have a refunding pressure. In very soon, they have almost more than 100 billion US dollar need to be refunding. Totally, they have 600 billion US dollar should be refunding. So I think so large, very huge. So it's not for them in very soon future. They cannot depend on European, dependent on American, dependent on Japanese. So they really want to find help from China, from Asia. But I think the number is very, very huge. So they really face tough pressure. So but of course, I will say from investor angle, we can see some opportunity from Russia. First, you know, because their funding cost locally become very higher. So if some entrepreneur from Russia, they really have mainly business in Russia, so they maybe have to sold those assets they invested in the past several years in Euro, in Japan, in US. So it's a good idea to sold those assets in US, in Euro, then transfer those capital, go back to Russia. This is more better because the funding cost in Russia is too high now. So it's so I think it's a good timing to do those deal sourcing about maybe some Russia entrepreneur want to sell some asset, Euro asset, American, US asset, something. And of course, I think so many investors just worry about Russia asset. But I think many Russia asset is listed in open market. Their only problem is the funding cost. But other things maybe is good. So also we can try to research and search this opportunity about those assets from Russia listed in Euro, in US maybe. So this is about Russia. And another country is Japan. So I just mentioned Japan would like to keep lower interest rate for a long time. The really reason is that they really have too much debt, sovereign debt. So anyone to be the prime minister, anyone would like to keep low interest rate for a long term. So I think I very believe in next 10 years, 20 years, they would willing to keep low interest rate. So it's so together we can see in different countries they have different opportunity and challenge. For example, we talk about asset price, so non-US become much higher. And for Japan, also their asset price has been increased a little bit. And we talk about capital cost, funding cost. So I just mentioned the lowest is from Japan, then from Europe. So it's a good idea to get capital results from those two countries. And if we think about the consumption market, so China is good, very good. So US is a little bit good, recover, very good. And talk about the opportunity for a short term. I think we should research the opportunity in Russia. So they really have some special opportunity in the short term. So I believe the consumption China will be the mainly driven power to drive the global economy in the future. So there is it is a very interest. In from most investor angle, they will always try to see the China as an emerging market. But the truth is not that. More and more industry, their market from China has been or will be ranked number one in the world. And most of them, their market from China will take 20 to 40% in the world. So those industry listed will be much longer in the future. So I just give you two examples. On the bottom of the left is a car market, automatic car market. So you can see the China almost take 27% in the world. That's ranked number one. So on the right is a luxury bought by Chinese customer will take like 29%. This is also is number one. So it's very good. And I see, so there is a very smart way can arbitrage for invest. First, we try to find out which industry their market from China will rank at number one in the world. Will be or already be. And the second, we try to find those leadership company in those industries. Then try to be their largest or the second largest shareholder of them. Then bring them back to China market very, very soon. So they can, through the growth in China, because China market is very huge, so they can very easily to recover all those reduced from other market. So it's a very smart way. So we call those model is how to combine China momentum with the global resource. So we have to do many things. I can give you several examples. So this map is our investment map in the world, global investment map in the and except the Great China, except China, mainland, Hong Kong, and Taiwan. So we have four models. I think it's a very typical model. The first is I just said on the top. The first model is how to combine China momentum with a global resource. So we find the right industry, we find the right company. Those companies maybe is a leadership in the industry, but they really not so well done in China. Maybe it is number one, but they didn't do very good work in China. So for example, I can give you an example like Shenzhen. Shenzhen is a little bit. First is a local luxury brand in US for women's suit, but of course looked a little bit too old. But in new season, their new designer is very good, much younger and much active. very good, very, very beautiful. But you know, compare with their competitor, Chanel women's shoes. So for Chanel women's shoes, their revenue almost 37% come from China market. But meantime, Xinjun only less than 1% come from China market. I very believe the market from China will be much bigger, much larger than from US very soon. So I think for Xinjun, if they really can work done in China in the future, it's very easy to recover their growth. Very good, very easy. So the second is our model to invest to overseas is how to try to find the cheap capital. I just mentioned because the interest rate regulation difference. So if we can compare with the cost in funding cost in the world, so you can see some capital results is very cheap. So we should try to find a cheap capital from Euro, from Japan. So we have done two cases. First is we invest the Fidelidade. This is Portugal national insurance company. We become their country shareholder. So their totally cost for capital is very cheap. I will mention it later. And also, to the end of this month, we will finish the deal. We invest Liang Xinjun. This is a U.S. Insurance company. So their cost also is very lower, much lower than China. So this is the second model to invest to overseas to find cheap capital. And the third is because you know for insurance capital, you cannot put those capital, all of those capital, to back to China or only invest those related with the China growth. You cannot do that. So most of them, maybe 70%, even 90%, you should put it in local market, like in cash, in debt, in bond, in fixed income. So you cannot bring all of them to China, to Asia. So we need to build our locally platform. So build a locally platform. Also, we can through the invest locally platform, not just send Chinese to there. So we have, for example, we have invested Idera. Idera is Japan, the fifth largest Japan property fund. So it's a GP. So we become their country shareholder, and through their help, only after we invested them 2 months, they find a good deal in Tokyo, and we invest a Tokyo building. We can get NOI, net operating income, almost annually 12%. Very good. So we invest capital from insurance, from Portugal insurance company. They are totally cost annually only 3.2%. So we get net NOI from Tokyo 12% annually. So this is very good. So the fourth way is how to help those Western company develop their business in China. So we become their JV partner in China market. For example, we help senior care. Fortress is a U.S. company. Also is a mainly senior care company in U.S. So we become their co-investor partner together in China. We will invest almost $3 billion in Great China to develop senior care business. Also, we have a JV insurance company with Prudential U.S. And also, we built the third Atlantis hotel with the Kirshner Group from U.S. in Sanya, south of China, the third Atlantis hotel. So we do many things together with Western company to develop their locally business in China, co-invest together. And so I just mentioned in China there are three China. First is manufacturing China. Most negative news about China is come from this. And the second is consumption China. So if you think about consumption China, I think all of them about China is a highlight. And maybe in the future you should think a little about much more capital China. So I think capital China will be much better than maybe than consumption China in the future. So we talk about consumption China first, then manufacturing China, then capital China. So I think for the whole world, in the next decade, I believe the consumption China will be one of the mainly driven power for global economy. But for China, the boom up opportunity for consumption China is all of those opportunities related with the middle class lifestyle. So you can see the bottom and the left Excel. So we can see the number of the middle class family from China not only take 6.1%. 9% in the world, but they will keep growth every year more than 15%. So that means 6 years later, the number of the Chinese middle class family will take 16% in the world. This maybe is number one or number two. So consumption from China middle class family not only take 6.1%, but their growth speed is very high. Every year, annually will be 21%. So keep a very high growth. So 6 years later will take almost 13% in the world. So this is maybe number one or number two. If you see the picture on the left, middle left, and we can see just on the left two 柱子怎么说？bar, okay, bar. So we can see for the city consumption, not only 31% come from middle class family, but 10 years later, 8 years later, will be 81% consumption come from middle class family. So if you really believe China consumption boom up, then you should believe all those consumption boom up will come from middle class. So you should only invest. You should focus your capital, time, talent in those industry related with the middle class lifestyle. So which industry related with the middle class lifestyle? So on the left and the up, we can see there are three things. First is the experience consumption, and the second is the upgrade consumption. The third is the personal financial demands. So we can see the first is the upgrade consumption. So you have heard, because in China we really try to control the consumption related with the government. So you have see last year the growth speed for luxury from China luxury market only keep growth last year 2%, and in first 8 or 9 months this year their growth speed is less than 10%. So it's a very lower compared with the last 10 years. In last 10 years, last 5 years, all those luxury market from China keep growth more than 27% every year. So now 2/10 is very lower. But I would say it's a good timing, because all those luxury is related with the middle class lifestyle. So once those bamboo related with the government consumption to be killed, to be cancer, then their real consumption related with the middle class lifestyle will be recovered. And once they recover, their growth speed should be much higher than 18%. So I think it's a good timing to choose the right target for invest. And I would say those affordable luxury also is good. For example, in China, we invest fully. This is a younger women's sword and a necklace and something, and not so high price. For example, every piece will be like 1,000 to 3,000 RMB every piece. So it's a affordable luxury, we call it. So their revenue growth is very good. So in first half years, they keep more than 20% growth in China. So I think it's a good idea, a good timing to find the opportunity here for luxury. And also I want to talk about the personal financial demands. So you can see the Excel on the bottom and the left. So this is a difference compared with the Chinese, American, and Japanese family asset portfolio. So you can see Chinese family, we put almost more than 60% in property asset, only 20% in financial asset. But on the other side, from US, Japan, European, is totally different. They only like more than 20% in property, almost 60% in financial assets. So compared with the difference, you can think about in the future for Chinese families, they face very tough pressure to increase their property asset for family because it's too high. But their financial asset, there is a so large, huge opportunity for increase. So if you think about that, you can understand why now in past 1 or 3 years there are so many boom up increase growth for personal financial demands. So then we talk about the experience consumption. So most investors understand very clearly about upgrade consumption, but very few they were trying to understand the opportunity related with the experience consumption. So experience consumption really keep a very, very good growth in China. For example, is the tourist industry. So in tourist industry, first, the industry volume now is much larger than pharmaceutical industry in China. This is first. And second, most good opportunity related with the tourist industry is inbound tourist. For example, last year, the outbound tourist from China almost 100 million, and also keep 18% growth. And they are each person per time they will spend almost 8,000 RMB. That means almost 1,000 euro. Also is number one. So the number, tourist number, outbound tourist number is number one. The consumption from per person is number one, and their growth speed is number one in the world. So all those industry relation to the outbound, inbound tourist industry is perfect. So we have tried to invest many things. Like we try to privatization Club Med. Of course, we face challenge now, and Also, we built a new Atlantis hotel in China, and we try to grow our, to increase our stock share percentage in Yu Garden, and we invest CITS, which is the largest outbound tourist agency and agency company, and also they are unique, like just a duty-free shop. They have a unique licensed duty-free shop here in China everywhere, and also we invest one APP is a 世界帮, like is a mobile internet outbound service. So we invest all of them. And another is a high-end restaurant, high-end food. So maybe you have heard some high-end restaurant chain now to be closed. Maybe some of them to be closed because they face challenge. But I just mentioned maybe we need 1 more or 2 more years to cancel those boom up related with the government consumption. So once those boom is killed in next 1 or 2 years, then really growth from middle class family will very stronger. So I think it's a good idea to invest high-end food, high-end restaurant. We have invested Osborne, which is a ham company from Spain. I think it will be warm welcome by Chinese customer, and also we invest in many restaurant now. And another experience is a movie producer. So this is the first time I know that. So I'm not believe. Maybe most American didn't believe. You know, in movie industry, movie market, now China becomes the second largest market in the world. So the largest is the US. But 3 or 4 years later, China will be much larger than US. Only 3 years or 4 years. So it's amazing, you know. So I think for movie producer from US, you cannot just concern about the market in Euro, in US. You should much more concerned about the Chinese customer. So that's the reason why we invest Studio 8 in Los Angeles from Hollywood. And also this is the reason why we invest Baoli Bona, now become the #1 game player here in China. And also this is the reason why we really be very, very interested in invest those relation to the industry. And another experience consumption is mobile internet. So in mobile internet is a very interesting industry. In the world, only 3 countries, their mobile internet industry is very unique. First is the US, second is China, third is Japan. Because you know, in mobile internet industry, their margin cost almost 0. So the huge your mobile internet customer, so the volume is much huge. For example, for China, we have almost 650 million mobile internet customers. For US, almost 350 million. For Japan, almost 250. But you know, 50 million mobile internet customer is totally different with the 500 million, not 10 times. Maybe 40 times, maybe 100 times. So I very believe because our mobile internet customer almost 2 times much bigger than US. So maybe our volume for mobile internet industry will be 3 or 4 times much bigger than US. China will be much bigger than US. I can give you an example. You can see the right Excel. So even our national consumption only 1/3 compared with the US. But the e-commerce from China now much bigger than US. So the same thing will happen once and once. 好像太冷了，它有没有这个空调？我看他们都觉得冷。So I think the same thing will happen in many industry. I can give you another example. So this is a mobile internet payment. For most Western foreigners, they believe PayPal is number one in the world in independent payment. But I would say, if PayPal come to China, their volume now in China is number 3, and 2 years or 3 years later, they were like ranked maybe number 6, number 5, because their 开购这个复合增长叫什么 ？C 啊？CAGR 啊？哎，它这个 convertible growth in from US almost compound. I'm sorry, compound. I'm sorry. In fact, this is my third time to try to speak in English so I'm so sorry.
No, you're doing great.
You're doing extremely well.
Oh, thank you.
Very good.
Thank you. So the compound growth from US keep very high, like 48 on the right and the bottom, 48% every year. But meantime, in China, we have 140% every year. So it's very huge. So, mobile internet is totally different with the PC internet. So PC internet is like a very pure internet. They like recover. They just instead of like entertainment, social, and maybe media, a little bit. They have like instead of media, but mobile internet is very different. Mobile internet industry just like mobile internet plus something. If mobile internet plus big healthcare, then is a mobile care, mobile healthcare, mobile education, mobile tourist, mobile anything. So I think because mobile plus traditional industry, then means the volume for mobile internet, I believe, were much larger, maybe 10 times, 12 times, much larger than PC internet. So it's a good timing to think about to invest mobile internet. So I just give you an example is about money market. Before mobile internet, add a plus money market. So we have 14 years to develop a money market in China. So totally volume is 300 billion RMB. But mobile internet only developed 14 months in China, combined with the money market. So their volume, mobile internet money market volume is 1.2 trillion RMB. That's 4 times compared with their past 14 years. So it's crazy, And I believe their volume will keep growth because we have so large deposit. We have 42 trillion deposit. Their return is very lower. So they are willing, I think those Chinese customers were willing to transfer their money from deposit to money market. The same thing happened in your US. So the same thing. So, of course, I think it's first I would say this PPT can send it to all of you if you need.
Oh, great.
Yeah, so you don't need just to record. Yeah. So I think this is there are 4 times to invest those mobile internet. First is we have know very well is about the venture capital model. So you can just use venture capital model invest the pure mobile internet. And the second, also you can use the PE model, private equity model. You can choose those company, maybe they earn money for a long time, but also they have very huge mobile internet customer. For example, maybe you have every bank here, their market value is very, very cheap now. But some of them, they have very huge mobile internet customer. For example, at least one or two bank, they have more than 100 million mobile payment active customer. But no one knows that. So it's a good timing to find those opportunity just in the traditional earn money company. And the third, also we can invest those traditional industry, but related with the boom up of the middle class. For example, I just mentioned the e-commerce. E-commerce is not 100%. E-commerce is not a whole mobile internet, only a part of mobile internet. But because e-commerce boom up in China, so all those traditional industry like logistic, like storage, like express, now in China become most sector traditional industry. So you also can invest those traditional industry, then can benefit from mobile internet. And of course, the fourth is O2O, online and offline together. So another good opportunity in China is big healthcare. But if we talk about big healthcare, we cannot just think about pharmaceutical manufacturing. You cannot just think about that. You should think this is a whole industry train. First is education and training, then R&D, then manufacturing, then wholesale and retail and logistics, then hospital, then senior care, then all those financial service related with the big healthcare. So this is like a whole industry train. So I think, because we have a aged problem, so in next 8 to 10 years, the industry for whole big healthcare should be much larger than property here. So we would like to say maybe the largest industry in China is logistic. And the second is property. None. But maybe 8 or 10 years, the largest maybe will keep logistic, maybe the largest. And the second maybe is big healthcare. So it's a good idea, good timing to develop a big healthcare service, not only pharmaceutical manufacturer here in China. So I think that's huge market from China, not only opportunity for local company, and also for whole world company. So that's the reason why we try invest like Celladex. This is a purely U.S. company.
Mr. Liang,
yeah.
Would you have time for a couple questions from the journalists?
Yeah, okay. Good. Yeah, that's okay.
Can we
When you
finish
finish.
PowerPoint first? Because there are a few slides.
什么意思？
Yeah, just a few slides.
我们先讲完吧，然后再问 Q&A。
Yeah. Very, very soon. I will just finish. Thank you. So I think this is for opportunity for the big healthcare. And the second is another is environment protection. So you have heard so many better words about pollution. So I think the pollution also is energy-driven power for both central government, local government, and industry company and family. They willing to pay more about environment protection. So it's a good timing to invest those industry related with the environment protection. So I think it's so for Fosun and both for Fosun and other international investors, they should think about opportunity. So how about manufacturing China? So I just mentioned the environment protection. Environment protection industry. This is related with the manufacturing China, because our manufacturing capacity now become too high, then they make some problem. So to solution this problem is a new industry now. So for manufacturing China, I think also we have some highlight. For example, is I just mentioned export is keep growth from the third quarter, and I think maybe in next several quarter will continue, and the price for oil keep reduce. So this also is good for benefit for China, and also the currency rate keep sustainable. Also is good for China manufacturing. But I would say for system, think about. I think for China manufacturing, first opportunity is how to transfer their manufacturing capacity to overseas. You just heard the APEC meeting here in China. So I think more and more Chinese manufacturing company will think about try to transfer their capacity, manufacturing capacity to overseas. We have tried one time. We transfer 1 million ton steel manufacturing capacity from Nanjing of China to Indonesia. So I think it sounds very good. And second is upgrade for the manufacturing, from manufacturer to manufacturer service. And the third is to produce those instead of import. Also, there are so many import. And the third is and the fourth is M&A. And of course, I think for traditional industry, we also need to reform is a property business. So so many investors worry about the property in China now. But I would say maybe this year, next year, we can see the small boom up for the property business here, because the release about the regulation from 2010, there are from that 4 years before, 4.5 years before, we have a regulation. They didn't allow non-citizen of the city to buy house, buy apartment. But now it's relaxed. So I think it's you know, for many foreigners, they didn't know how many students education every year in China. I can tell you, in past almost 10 years, every year we have almost 7 million students educated from university. So only 1/3 is from local city. They can be allowed to buy apartment. Other 2/3 not be allowed to buy apartment here. So now they will be allowed in the future. So you can see 7 million, 2/3, 5 years, how many people. So this is a huge demands. So I think maybe 1 or 2 years, next 1 or 2 years, there is a small boom up. But in the future, we really face the challenge. Supplier is much bigger, much larger than demands. So should be changed. So I would say in China, the traditional like apartment develop and say like commercial property development face challenge. But also there are many there are new opportunity for property business. For example, is a logistic property. For example, is a senior care property. For example, is a tourist property. So also there are so many property here. And so the capital China, I think also is a very good opportunity in the future. First, you have heard is the ODI. So this year is very interesting. ODI from China will be much larger than FDI to China, and more than half is come from private sector. So I think more and more country, they really welcome capital from China, for even the European company, even Asia companies, they really warm welcome. And central government also allowed and encourage RMB to be much more international. So they will allow private company and personally much freely to transfer their money from China to overseas. So much free. So I think is in our model, I think in next 10 years, maybe we'll have $3 trillion US dollar. They willing to invest to overseas. That's very huge. You know, in past 36 years, totally FDI to China, only 1.4 trillion US dollar. So in next maybe 10 years, we have 3 trillion US dollar willing to go to overseas. So it's very huge. Of course, it's also the opportunity for those financial service company in overseas. So I think for capital China, they really have some opportunity, but those opportunity none is only on the horizon. So for Fosun, we really think about how to build our own new normal. So in China, we have new normal. So for Fosun also, we have a new normal. Our new normal is insurance plus investment. So now we have total asset 300 billion RMB, and 37% come from insurance flow. Insurance 保险付存金怎么说？insurance flow. Float money. Insurance floating money. So we can compare the three capital results model. This is all capital from our own balance sheet. So you can see our WACC. So you know our funding cost from debt annually only 5.6%. So not so high compared with the other Chinese company. But our stock price now is not so high. PE only 10 times. So our WACC, the cost for all those capital results, almost 8%. So it's not so cheap. Another is fundraising. So we have out of the balance sheet, we have 34 billion RMB fund. So we manage 34 billion RMB fund. So for those LP who give money to our fund, they are expect get a return more than 15, even 17% annually. So even we didn't guarantee them, but once I get return much lower than that number, so I cannot get a fund second time. So it's very, very high. So I think it's a good idea to get much more capital results from insurance flow. So now we have 5 insurance company, and their totally cost is insurance flow cost annually cost is 3.2% annually, and to the end of this year we will have 140 billion RMB insurance flow. So I think to be more globalization from Chinese company, also for those Western company to be more Chinaization, this is a new model. You need a learn curve. So for Fosun, we make decision to be globalization from 2008. So almost we spend 7 years to learn and to be very professional in this model. In first 3 years, we only invest 2 cases, spend 110 million euro in 2 cases, 3 years. And the second 3 years, we invest another 6 cases. So this is the 7th years. So we are very professional now. So this year we invest 12 cases. So we oversee, we have almost 20 MD partner. So it's very easy to find and the close deal. So the same thing happened for insurance. We learn to operate in insurance. Also spend like 7 years. In first 6 years, even we are very hard working, but the volume from our insurance is very small. To the end of the last year, the total insurance flow only 13 billion RMB, very, very small. But to the end of this year, will be 140 billion RMB. So it's meaningful. So I think in the future, the most core point for competitor ability in the world, in the for Chinese company, I think is a talent. So we should attract much more talent and try to remain them. Then we can become more stronger. So for Fosun, we think about how to much small every platform. So we just split every platform. So we have many platforms. For example, is like professional industry platform, and a professional geography platform, and a professional investor asset type platform. So through such a way, we can spread 划分怎么说？ we can divide the platform very small. For example, for food platform, maybe only 7 persons. But we have a partner here, so they own the shareholder here. They can benefit from all those values they have created. So it's much easier to remain them. So I think, of course, for track those talent, first we can try to hire, and second try to training, and third we can through invest locally platform, not just all by yourself. So this is a different way to try to attract talent. So I think I just want to tell you about some truths. So China is not so perfect, but not so bad. Nothing to worry about it. So it's good. And the China growth also can benefit for Chinese company. And through Fosun's model, how to combine China momentum with the global resource, also can benefit for Western company. So thank you very much. Yeah, sure. Thank you. Okay, please.
Tom Lee with the San Francisco Chronicle. I'm curious, you have a lot of investments overseas, and I'm wondering, do you have your eye on Silicon Valley and San Francisco in terms of perhaps using that VC model that you talked about to invest in startup companies or even at more mature tech companies in the Bay Area and Silicon Valley? Just curious.
Okay, 把他问题的确切说一下。
他是想问，就是我们有没有在三藩或者是就是湾区这边有专门的 VC 团队
？Yeah, in San Francisco, in Los Angeles, in San Francisco we have R&D for pharmaceutical team, and in Los Angeles we have a venture capital team, and also in Hollywood, in Los Angeles, we have a movie producer there. So we have 3 partners, 3 MD here in the West. And in New York, we have a PE partner, PE team, and a property team. And in Houston, we have oil and gas team. So totally in U.S. we have 6 MD, 6 partner there.
But do you see yourself investing more into tech startup companies in Silicon Valley? Is that an interest of your company?
Yes, yes. I think both brand from U.S., both innovation technical company, and those and maybe even mobile internet company from U.S. All of them can benefit from market growth from China. So I think we are willing to invest American company, U.S. company, and bring them back to share the growth from China.
Thank you.
Thank you. Yeah, please.
Excuse me. What when I look at your vision for China's growth, your company's growth in the years ahead, you paint a scenario in which the middle class is growing and interest rates remain low and so on and so forth. What would you say is the biggest risk to your vision of how the Chinese economy will grow and thrive and succeed in the years ahead? What could be the one thing that would create a problem?
For China economy and also for our company, I think most risk challenge is reform for traditional industry. So in past 10 years, most driven power for China economies come from manufacturing. So now most manufacturing is oversupplied. So we need to be reformed. So reform is not an easy word. That means cost. So if you cannot very smoothly through this reform, then you face risk. So that's the reason why I remain 2 pages talk about reform for manufacturing, reform for property. That's the reason. So need a reform.
Last question.
Yeah, please.
Yeah.
Okay. Thank you.
Can you tell me about speaking about the middle class and the idea that you see much of the future in China's middle class investing in luxury items and that sort of thing? What about foreign direct investment in other parts of the world where with rising middle classes? For example, I didn't see you mention any assets that Fosun is looking into in Africa. I mean, could you? I'm curious. Is Fosun looking at any sectors that would or commodities that would fill this kind of rising middle class in a place like Africa or elsewhere, like they are in China?
他是想说，现在看到我们都是投资一些轻奢的奢侈品在各个国家，但是我们会不会也有在非洲，跟能源啊这方面有兴趣？
So if we think about Africa, some South of Asia, so I think it's a good timing to try to transport those manufacturing capacity from China to Africa to South of Asia. But it's very hard to find the opportunity to invest those brand and something. But also, if we also can find some opportunity to invest clean, safety food and some agriculture products is a good idea to find from South America and Asia, South Asia and maybe Africa. So it's very hard to find branding and service there.
Thank you, Mr. Liang.
Thank you so much.
Thank you very much. That's all right.